Okay, folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond, and what we're going to talk about today are the trades we like: microchip technologies, advanced micro devices, Palo Alto Networks, Apple, and Cummins engines. We're going to talk about short-term trades with these names, and we'll talk about credit spreads and how we plan to profit on a counter-trend move, because most of these names have been pretty much beaten up. So we are going to get a reversal here shortly. I think that reversal is going to be short-lived because I'm bearish on the market. What you're looking at right now is our return from July 6th through to present day, August the 5th. We are up 11.22% in that time frame relative to the triple Qs, which are negative over 3%. Why don't I show the dollar amount? It's because I'm not going to be one of these guys on YouTube that wants to flash the size of their bank account. All I care about are returns. I was reluctant to do this, but I was encouraged to do it to help build an audience. So this is where we're at. And the question you should be asking is, how did we get there? What did we do to get to 11.22% relative to a negative 3% for the Qs? We sold premium. We sold options. We did some buying from time to time. We went long of certain names like Platinum, PPLT. We made some money there, but by and large, this was mostly options selling, not options buying. We like to be the casino and not the gambler. So we'll talk more about our strategies as we go through these charts in a moment. But before we do that, we are going live tonight, 6 p.m. Eastern Standard Time, Sunday Night Futures Live. It's when the stock market opens in earnest in the futures market. We'll get a feel for how they're going to open the markets up. My guess is that we wake up tomorrow morning and we will see bright green futures. Why? It's because they want to spike the market to get the amateur money off the bench, or as the Wall Street whales like to call us, dumb money. I didn't name us that. They named us that to take advantage of us, because what they want to do is sell into a pool of liquidity because they want to lighten up. We're going to go over charts. The triple Qs broke down last week. We're going to go over the yield curve, which broke out on a weekly time frame and began steepening last week. We're going to go over volatility, the volatility index. So again, join us 6 p.m. Eastern Standard Time tonight. And if you get any value out of this video, please like, subscribe, hit that notification bell if you want to get notified of when we go live. Also, down below, 5-part video tutorial on my top 5 favorite candlestick patterns. It's free. Take advantage of it if you want to understand the terminology that I'm using when I'm talking about candlestick patterns. So let's get to it. So going into the new trading week, our sentiment by and large is bearish on the overall market. That does not mean that they're not going to try to rally it up. The question is, does that rally hold by next Friday? Now, while I'm bearish on the market, we are not net short the market. We may, this coming week, if given the opportunity, add to our short positions because we're clearly hedged. We certainly are hedged. We were looking to build a long position short using put options or debit spreads, which is the purchase of a in-the-money put option and the simultaneous sale of an out-of-the-money option to help finance the trade. What that does is that, yes, it limits the amount of money you're going to make because you sold that put deep out of the money, but it also helps finance the trade. It's just smart. So just in case you are wrong in the short term, the sale of that deep out of the money option is help financing the trade and offsetting any time decay. And we booked profits on our September debit spread, and we rolled out and into November, so that way we had a little bit more time on our side, as well as the theta decay or time decay being less than what we got on the Septembers. We also chose November and not December due to the fact that it's a seasonally strong period of time for the equity markets. So in all probability, we'll be out of that trade by November. So let's get to it. So the strategy going into the new trading week is to take advantage of intraday extreme oversold conditions. We're not going to be buying these stocks. What we're going to be doing is we are going to be selling credit spreads, meaning selling a out of the money put option with the simultaneous sale of a deeper out of the money put option. That way it reduces our draw on buying power. It also provides us an insurance policy if we are wrong and or this market gets real ugly real quick. Now, what we need to appreciate is where each of these names are in terms of historical support before we enter these trades. And we also need to identify the intraday tenacity of the selling. Is it alleviating? Is there still distribution? And once we've identified that A, we're at historical support, and B, the intensity of the selling is beginning to alleviate, then we can open up the sale of a credit spread. We do not want to stay in that trade too long, because on any rally, I predict that there's going to be a resumption of the selling up and into resistance levels. So taking a look at Cummins Inc., you could see that they had a massive move lower last week. And by the way, we're using TrendSpider, 35% discount code below, automated technical analysis. So these shares were down nearly 9% on the week. We broke through a congestion level here in red. We do have historical support down here at the 230 mark, which I happen to like. And we also have a volume shelf down here, which coincides with support here as noted by the 20-period moving average on the Bollinger Bands on a weekly time frame. So we'll probably get a bounce once we're in that neighborhood. Now, looking at a 30-minute chart of the intensity of the selling of Cummins, you can see that in red here, very, very strong and intense selling. We went yellow, a little bit of a counter trend rally, then we faded yet again, but the selling intensity was not as great as it once was. So as we float down towards historical support, we're going to look to open up that credit spread. Again, that is the sale of a deep out of the money put option. And how we'll define which option we're going to use, we'll take a look at a 212 to 215 put option. Our probability of profit is around 77%. So we'll sell that option and then simultaneously buy a deeper out of the money, resulting in a credit in our account. So if and when Cummins begins to rally, the value of that option will deteriorate in value and we pocket the profits. We'll look for a 25 to 50% profit and then we exit stage right and we get paid. So in essence, what we're doing is we're using time. Time is our friend when we enter these trades, and rarely is time your friend in trading. But in this instance, it is, because those options are deteriorating in value. And since we're options sellers, we like that. We want those options to expire worthless. We don't want to be the guy that's out there buying options, hoping that he's right, with time working against you. That's stinking thinking. We don't do that here. Unless, of course, we have a very, very big edge over other traders. And in the case of Cummins, there's no way on God's green earth I'm looking to buy call options. So I'd rather sell premium and look to get paid by simply allowing time to work for us. And as the shares rally, do a little bit of a counter trend rally intraday, then those options decrease in value, and that's how we get paid. We are the casino and not the gambler. Now, I know this is a little bit complex. If you have a question, please leave it below, and I will certainly get back to you, because I want to build an audience based upon option premium, not just buying stocks. We love to do that as well, but in this market environment, you need to be very, very careful, because again, I'm going to go over tonight, as I usually do on Sundays and Thursdays, the whys behind. You need to be very, very careful about this stock market, because the floodgates of selling can open up at any given time, much like we saw last week. And last week was baby steps in comparison to what we've seen in the past in terms of a market that begins to puke. Now, the next chart up is Apple. Now, Apple is one of the main reasons why I believe that they are going to spike the market this coming week. I think that we are heading further into a correction. I'm not ready to call it yet a bear market or the continuation of a previous bear market. I'm not in that camp yet. But if the whales on Wall Street are thinking that this is the beginning of something, they're going to need to exit Apple, because every large cap portfolio has Apple in that portfolio. Every growth mutual fund ETF is going to have Apple in that portfolio. They're going to need to reduce size. Will they sell into selling like we saw last week? Some of them will. Others are going to be a little bit more creative. What they're going to do is they're going to create a demand pool. And what they're going to do is they're going to try to rally Apple back up. They're going to have talking heads come on to CNBC giving you the whys of why you need to buy Apple, why it's such a forward-looking company, and that not to be in this stock is a mistake on the part of every single investor out there. And you're going to think that you're missing out on the greatest pullback and buying opportunity in the history of equity trading. Don't let them take parking space up in your head. All they're looking to do is look to create demand, because as the whales sell, they need a pool of demand to sell into. Don't let that be you. Now, what we want to do is we're anticipating a rally on Apple. Am I bullish on Apple? No, I think it's going lower, but not necessarily in the near term. Do I want to buy the shares of Apple? No, I'm not interested. I want to sell credit spreads, put credit spreads. So I'm looking for support on Apple down and around initially here at 180. If I'm wrong and they don't gap the market up tomorrow morning, I'm looking for support down here at 177 to 175 per share. And at that time, at that time, I'm going to look to sell premium with a probability of profit of 77%. Right now, that would be at 169 per share or 170, depends upon the increments they're selling the options in. It could be dollar increments. It could be $5 wide spreads. It all depends upon the stock. So if Apple moves lower, obviously the strike price on the put is going to move lower as well. But we're looking for a 77% probability of profit. Let's do a hypothetical. They open Apple where they closed it on Friday and it's flat. I would be looking to sell a 170 put option and then simultaneously buying a deeper out of the money option just to act as insurance, just in case I'm wrong. And plus, as it reduces the amount of buying power I need to dedicate towards this trade. So it's just smart. And as the shares of Apple rally up into the intraday 21 period moving average, we look to exit the trade, pocket the difference, again, 25 to 50% profit. We move to the sidelines. Now, looking at the chart of the intensity of the selling on Friday, it was a nightmare day for Apple. Really, really brutal selling. You can't rule out lower lows here on Monday, but my guess is that they try to pop this up higher. Maybe they'll open it flat, but I do believe that in all probability they are going to try to paint the tape tomorrow morning and try to get the equities market moving in the opposite direction of last week's performance, which was down. At this point in time, it's going to take a lot for us to want to get long of this market. So Apple, we're looking for a quick scalp using a put credit spread, and that is a bullish bet because we are the casino selling options, not the gambler who's buying options. The next chart up, Palo Alto Networks. This is a weekly chart, as were the prior charts, and you could see that Palo Alto Networks had a brutal week last week, down over 12.5%. We broke through one support level in green, held at a second support level. Is this the bottom? Not quite sure. We'll make the assumption as we're strategizing this trade of where we want to sell premium at using a credit spread, a put credit spread. And some people get confused. They hear credit versus debit. A credit spread is when you sell the premium or you sell the options. A debit spread is when you are buying the option. Just think of a debit card taking money out of your account when you buy, and a credit is when something is credited back to you. So it looks as though we closed here on the week at a fairly good support level. Let's take a look at an intraday chart. Were there buyers into the close, 30-minute view? They drifted it up off the lows of the session into resistance. So it's questionable as to whether or not this is going to hold on Monday morning. We'll see. Let's go to the Thinkorswim trading platform and bring up PANW and get a feel for the intensity of the selling. And it was brutal last week. Now in blue here is the 21 period exponential moving average. You could have some short sellers looking to sell short PANW into that resistance level. I wouldn't do it. I think there's too much damage that's been done here. The risk of a counter trend rally is way too strong. I would rather stay a far distance away from where the shares traded by selling credit, selling premium. So let's talk about what that may look like. So again, we're looking for a 77% probability of profit If they open the shares up where they closed on Friday, we'd be looking to sell a 185 put and then buy a deeper out of the money put option to act as insurance on our trade just in case we're wrong. And again, it helps reduce the amount of buying power that we need to use on this trade. So it's insurance and it's a reduction of buying power and it's a very, very strong return on capital when you're right. What will we be looking for on this trade? What we'll be looking for is a counter trend move. If they move it up into the 228 range, 224 range, wherever we get a 25 to 50% profit on that trade, we don't care where the shares are trading. All we care about is that 25 to 50% profit. We want to get in, we want to get out. It could take a day, it could take 2 days, it could take 3 days. But the probabilities of profit are on our side. In this case, nearly 80% probability of profit. You don't get that by buying stock. At best, it's 50-50. And those are horrible odds. The next trade that we like moving into the new trading week, and these are really contrarian trades, folks. Very much so, but with a high probability of profit. Analog devices. All right, so analog devices broke down below multiple support levels after hitting resistance up here. So we closed just off of historical support. That makes this pretty interesting because we're already there and we could quite possibly open up this trade as soon as Monday morning. Now, taking a look at the intraday chart of analog devices, you can see that the intensity of the selling was mostly on Wednesday. It had a continuation breakdown on Friday. And I think that this points out these two rallies here, points out what we're trying to capture, right? We're trying to capture counter trend moves. The overall trend is down. Can't argue that. It's down. It's probably going lower in the future. But you're going to get counter trend moves, much like you see here. And these indicators that we use help identify when you're about to get a counter trend rally. Now, sticking with the strategy of, at a minimum, 70% probability of profit, we want to go to our Analyze tab and say, okay, where do we want to sell premium for a quick scalp? And I'm looking at the 170 strike, selling that option, and then buying a deeper out of the money put option. Both of these are puts. So when you sell a put, that's actually bullish, not bearish. And when you buy a put deeper out of the money, which is less expensive than the one you're selling, you're creating a spread. And as the shares move up, as they did here and here, well, then those options decay in value. And as option sellers, we love time decay. We love when options decrease in value because we get paid. Now, you may be asking the question, why not buy the stock outright if you believe there's going to be a counter trend rally? It's because we're working on probabilities here. All right? If I act right now, assuming that the shares open on Monday where they closed on Friday, my probability of profit is 77%. And I have an insurance policy built into that trade, so I know my max loss. If you buy the stock, at best, your odds are 50-50. And since I already have a built-in stop loss order on my trade, the question is going to be, are you going to be disciplined enough to use a stop loss on your trade? Because remember, it's not necessarily a battle against the stock market. It is a battle against our own psychology that we deal with. And arguably, the psychology battle is much harder to overcome than the battle with other traders. That's the beauty of selling credit spreads, whether they be call credit spreads or put credit spreads, strangles, whatever. And that's a simultaneous sale of a put credit spread and a call credit spread. That's a strangle. And we love that strategy. Now, the next chart we have to go over is microchip technologies. In the past, this has been highly correlated with Bitcoin because Michael Saylor, I think he's the former CEO now, was leveraged up. He leveraged the company up, which is why I don't think he's there anymore, massively to the performance of Bitcoin, which is kind of ridiculous and reckless, to be honest with you. So we broke down last week, obviously below the support level. We closed at a volume shelf, which could be support. We do have right below here in red the Keltner channel, which should act as a support level, and that's at current about $78 per share, give or take a dime. So same strategy here. We want to be neutral on the market by and large. Yes, these are all bullish plays, but they're very short term because overall I'm bearish on the market. The strategy here is that we're going to take advantage of any counter trend move in the market, which I believe is going to be temporary given the last week's breakdown in equities, in particular the triple Q. Again, we're going to be going live tonight talking about these 6 p.m. Eastern Standard Time. Hit that notification bell, like bell, and whatnot, and get notified when we go live. And join us. And we do chart requests as well. So if you have a position that you're worried about right now, I will be taking chart requests this evening, and it's free of charge. So let's talk about the strategy here on Microchip Technologies. So here you can see there was a tremendous amount of selling. That selling has alleviated somewhat. Now we're kind of neutral. We're trading a bit sideways. We are still putting in lower highs and lower lows, so the trend is clear and defined. It remains to the downside. Now, they're only trading monthly options on Microchip Technologies. That leads me to believe that the options are not massively liquid, which is a negative, to be honest with you, because liquidity is key. But were I to do this trade, I'd be looking to probably go up higher because you're still putting in lower highs and lower lows. I'd go up to 80% probability of profit. I'd be looking to sell a $70 put option going out into September the 15th and buying a deeper out of the money put option to act as insurance. And again, helping to reduce my buying power reduction by putting on this trade. And then as the shares begin to rally and we get that 25 to 50% profit zone, we exit the trade. We're not waiting for expiration here. We're going to stick to our mechanics of taking profits between 25 and 50%, re-raising capital, getting liquid, and then looking for the next opportunity. Folks, don't forget, join us tonight, 6 p.m. Eastern Standard Time. Like, subscribe. We have a 14-day free trial offer. We'll be sending out alerts on all of these trades. Not only do I send out the alert on the trade, I post the confirmation from my account into our Slack forum, so that way members can see exactly how I structured the trade, and that way there's no miscommunication of how this trade was structured. That's what I find best to do when it comes down to options. Till tonight, 6 p.m. Eastern Standard Time, enjoy the remainder of your weekend, and don't forget that 5-part video tutorial on my top 5 favorite candlestick patterns, link below. I'll talk to you soon. Be well. If you enjoyed this clip, please check out the full version in our members area by signing up for our 14-day free trial offer. We'd love to see you in the forum talking with some really great people. So act now, join, and get all of our commentary, market insight, trade alerts, and options income right now. 14-day free trial offer. I'll see you on the other side in the forum. Make sure you say hello. See you there.